What if everything you thought you knew about Italian startups was wrong?
Our main point is actually there's very little downside of taking risk. And that's a big mindset shift.
The capital flood has already begun.
A lot of foreign investors coming in. How many of the sort of seed and Series A Italian companies received foreign capital? It's been exploding over the last even just 2 years. For us, this is an important data point on the acceleration.
But while others chase deals, one fund built something different.
LPs look for firms that raise from a point of advantage and builds towards a point of domination. What is it that you're doing that's allowing you to get to a point of domination instead of just advantage?
Their secret? Turning wins into bigger bets.
I think it's important to take liquidity when it arises. Leverage secondary opportunities to take some money off the table and recycle it.
Because in Italy, hardship breeds something unstoppable.
Ultimately, where you come from, what you lived, what you suffered, form the character and often the ambition.
Now they're rewriting the rules of European VC.
We're organizing something with Mark as well around B2B SaaS. So very excited to have all of those experienced brains and people coming to Milan.
Discover how a tiny founder-led fund is turning Italian grit into global returns. This is the European VC podcast.
Before we start the show, a quick note. If you're building or running a fund, you know it takes the right partners. At EUVC, we only work with sponsors we truly believe should be part of your tech stack. Please do take a moment to hear about them. And if you do, reach out, mention EUVC. It's the best way you can support what we do. Thank you so much. First up, ACE Alternatives. Every fund manager needs clean operations behind the scenes. From fund admin to tax and compliance, ACE handles it all across VC, PE, private debt, and real assets. They're trusted by some of the best investors in the world, and if you want peace of mind and a scale-ready back office, ACE should be part of your stack. Finding deals and managing your portfolio is at the heart of running a fund. Synaptic helps you discover startups before others do, and Portfolio IQ keeps your portfolio data sharp and ready for LPs. Together, they're essential tools for modern fund managers. When it comes to legal, you need a team that truly knows venture. Haynes Boone supports LPs, GPs, startups, and scale-ups across the full fund lifecycle. Smart managers make Haynes Boone part of their stack. We have two at EUVC. Tech Barbecue. Oh my God, who doesn't love barbecue? Europe's startup scene meets the loudest, friendliest family reunion ever at Tech Barbecue. From Nordic founders to global VCs, this is where ideas catch fire and relationships get real. If you're building or backing in Europe, Tech Barbecue is where you want to show up. And hey, if you've got a big fun announcement coming up, want to hit the headlines, or just want to tell your story out, do reach out to us because we'd love to help. And we've got some killer partners to help you get in the right media places. They've helped us land Bloomberg, CNBC, Financial Times, Forbes, and many more for the EUVC Summit, and we'd love to do the same for you.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.
This show is not investment advice, and the hosts of this episode may be invested in the funds and companies featured.
All right, Lorenzo, my man. Welcome on the European VC podcast.
Hi, Andreas. Thank you so much for having me.
It is my pleasure. So we have many friends in common. So this is going to be, for many, probably like listening into just a conversation between friends. But I said before we started this, Lorenzo, I said, I'm going to take you through something completely like nothing I've ever done before. I have not prepared enough for it because I probably should have spent more time developing this framework. But together with Patrick Hellerman from Foundamental, we've been playing around with a framework for testing your edge as a VC. And then, when you and I spoke about doing this podcast episode, I said, well, why don't we take you through this questionnaire, so to say, and see how does that go? And you were fresh enough to say yes on the back of not getting the questions or anything beforehand. You said, yes, let's do it. Let's try and see. So thanks for taking that challenge.
Very excited. And, I'm a big fan of what you guys have been building over time. So curious what this will bring, and looking forward to it.
Yes, thank you. Well, strap in, everyone. Maybe there's going to be some waffling in this episode. We'll see. First of all, if I just set the context of this, so why is it relevant to talk about testing your edge as a VC? This is what every LP says when you see LinkedIn posts from the LPs that feel like they need a a public persona. They say you need an edge as a VC. If you're not differentiated, you're nothing, all that stuff. You've all heard it a million times. You've all been in LP calls where people have been taught to ask you about your edge, and then you say something on the background of that. I think, however, very often that those questions are asked without actually knowing what you're looking for, and also they're sometimes being responded by people not knowing exactly what to answer. So what I've been trying to do together with Patrick is distill a little further, a little closer, what is it that you're actually looking for when you're testing a VC's edge. We'll have the whole framework together with this episode when it goes out. So for that reason, you can go in there if you want to see it in a set up as a nice framework. I don't want to go through it all here because it's 7 big questions. So for that reason, it would be a bit cumbersome if I went through it here. You can also listen to the episode that we've recently launched with Patrick, where we talk through the whole framework as well for some more detail. But let's start with the first core question, which is the question of empathy. I want to ask you, Lorenzo, why do you have unique empathy for the founders you're backing for executing on the thesis that you have created with the Italian Founders Fund? And obviously the natural place to start is, first, let us all know, what is the thesis?
So the thesis of Italian Founders Fund is mostly to sort of invest in Italy and act as a lead or co-lead investor with reasonably large seed or pre-seed tickets to increase not only the financial sort of firepower of those companies, but also give them all sorts of support angles to increase the probability of success is always what we sort of communicate to them. The second and the third verticals we invest in is invest in Italian founders abroad. So diaspora investing, there we are more of a follower investor, and it can be globally. We have no restrictions. And the third vertical is we're going to be opportunistic on foreign ventures that enter the Italian market, and where we think we can give them a material edge on doing well in this market. So where us as a team, our whole LP community, and we'll get to it, which is one of the core components of Italian Founders Fund, and over time our venture portfolio, can give them an edge to do really well at the beginning when they launch Italy as a new market.
I'd love to ask you and dive a bit deeper there on, we're saying Italy and Italian diaspora. And then my question to you is then the unique empathy question. Why is it that you're the best to do that? Does it really matter that you're Italian? Why wouldn't I just go seed camp?
I'll ask the second part first. So I'm actually half Italian, and for some I'm a fake Italian because I grew up abroad, spent most of my life abroad, and only been living in Italy since over a year. So I think to really honestly say to your question, I don't think you per se need to be Italian, but you really need to understand Italy and the culture and the dynamic, and I think the people, their education, their influences really, really well. Because as most cultures, but I think the Italian culture is really strong, they have a significant impact on how people behave and the choices they make.
How so?
So, your parents in the beginning give you certain values, they give you certain paths. I think it's still very typical. We hear it a lot here in Italy that, what you sort of heard in your upbringing is so important in the choices you make. We're excited to see more and more people deviating from the path that's sort of been written for them, but it's an important sort of element, right? And I think the risk-taking culture, how big you want to make it, what you want to reach in life are all often a mix of personal attributes, but they often come also from the cultural impacts that you have had while growing up, right? I think ultimately where you come from, what you lived, what you suffered, what you have seen, and many other things form the character and often the ambition of people and founders.
Can I just ask you, because when we had Andrea Di Camillo from P101 on the podcast recently, where we did that deep dive on Italy and kind of the macro factors and those things, what he described was a bit that the Italian startup ecosystem, the startup culture, it has not for many years been very strong, but it's getting stronger. But it's definitely, my feeling at least was that, and typically a VC from their own culture wouldn't say that, but my takeaway was that there's definitely still work to be done in terms of being a founder to be the very first thing that a high performer in Italy would be thinking about. Is that true, or?
Absolutely. I think, there is a big risk aversion. And I think linked to the culture point I mentioned before, there is still in those high profiles, the direction given that they need to sort of fit in what's meant for that role, right? So if you're a scientific, or if you're an engineer, you sort of need to go in the best research firms and or universities and do a path there. If you study business or law, you sort of need to really go into the best banks or law firms, etc. But you're not that much pushed to take risk. Our main point is actually there's very little downside of taking risk, right? And I think to your point on empathy, all of us have been entrepreneurs, and we realize how much you learn by doing. And so I think the big element is to give confidence to those potential founders or potential hires of startups that they're not taking a big personal or career risk by going off that typical path of the corporate world or the university world, but going into the venture world. And that's a big mindset shift that I agree is changing, right? There's more examples of success, more peers are coming and speaking at universities and explaining it, and people watch more content online, and many people, including you guys, are spreading the gospel of venture, etc., which I think is very, very positive. So that's why it's accelerating, but we're still, I think, behind some other cultures where risk-taking is a bigger path. I think there is one element as well is a bit on the demographic, right? I think in Italy, we haven't had this wave of immigrant-led entrepreneurship that you have seen in very large ways in the US, but I think I've lived for 15 years in the UK. Most of the unicorn founders I have known actually have been non-Brits, and there's a lot of Brits, but and that Italy has been missing, right? So I think that's something very important. It replaced it a bit by great Italian founders abroad. So where you have that, they've left Italy, they've left something behind for whatever reason they had, and they've done really well abroad, right? And part of what we're trying to achieve is to combine all of that and get that in a whole new generation of founders locally.
So far, how many of your investments have been in Italy, and how many have been in those diaspora founders?
So we've done 6 investments. 5 of those are in Italy, and one is in the US. So for me as an angel, I would say 90% of my angel portfolio is outside of Italy. I only have 3 investments in Italy.
Are they Italian diaspora or not many?
Only a few. I would say the majority have been local founders in France, Germany, UK, US, which have been the sort of ecosystem I've been navigating mostly before moving to Italy and starting Italian Founders Fund.
And here I'm opening up the second question of this testing the edge framework, which is basically how many reps have you done? I like working out, so some would say you can see that, some would say you can, Andreas, get more stuff done. Could hit the gym, bro. But I'd love to ask you, because this is the question, right? When I ask you about your background investing and how many of those founders have then actually exhibited those characteristics that you're describing, that you're targeting with the Italian Founders Fund. Your background, you've done a bunch of angel investments, but actually they haven't been so much in Italian diaspora and Italian-based companies. So what makes you unique in terms of executing on this thesis in Italy, and what makes you think that it'll actually work?
Yeah, I think the underlying traits that you want to find to successful local founders or local ecosystems, or the second category abroad, I think are quite similar. So I think the main flag is, with what I have seen abroad, I want to help complement all the influence that Italian founders have and basically help them to do well and increase those probabilities of success. Abroad, I've, as an investor, I've invested in most likely around 20% of my investment as a professional investor before, and an angel have had that Italian component. But it's, again, there's not a reason per se to differentiate between an Italian founder or a French founder in France. when you're an angel and you can do anything that you want, right? So we now have a clear thesis. Big component of why our LPs have invested, and it's nearly now 120 of them. It's a big give back, right? And that's why that cultural element is so important in our fund strategy. But it's not per se something I was searching before as an angel or as an institutional investor.
Now, just to put in a comment that I will not necessarily ask you to comment on, because it might be difficult for many reasons. But when I do this as an LP and ask this question as an LP, one thing is, me reviewing your background vis-a-vis what you're investing in. But there's also another thing that I won't ask you here on the podcast to comment on, but which I think is true, is that you also want to look at what's in the market. And Italy for a long time has not been seen as one of the very sexy markets you want to invest in necessarily. Definitely not a dedicated manager to Italy. Because you've said there's just not been that much. But also as an LP, because when you look at the funds that's active in Italy, they have had other characteristics than what many traditional LPs would be looking for. And here I talk fund-of-fund LPs, right? And I think there you probably hit more of the marks that that many would look for. And here I'm not talking, and this is to be very upfront and clear about this. I'm not talking quality judgment here. I'm just talking about what do you look for in a manager. And there I think that your background is closer to what most would look for. But and maybe on that note, just because not everyone knows you, of course, so maybe you would describe your own background a little more detailed than you have already.
Sure, of course. So I'm half Belgian, half Italian. Grew up between Belgium and the UK while holidaying in Italy, which was great. Now moved to Italy around a year and a half ago with my family. I have a professional background where I started my career more in investment banking, then had a chance to leave that to enter the venture ecosystem in France at the very early days of its acceleration. So that's what then led me to also be an angel investor into that market, and have been very lucky to see a lot of the great companies we know now, like Spendesk, Algolia, some of those companies, to know them and have had a chance to invest at the very beginning of those companies. Then I left to be a founder and spent 5 years building a company called ZipJet between London and Berlin, where we raised capital from many different European venture capital firms, but also a few family offices. And then started my venture capital investor chapter after the exit of ZipJet and joined Global Founders Capital, where I covered Southern Europe and Benelux and been investing in over 20 companies with them for the 3 years preceding setting up Italian Founders Fund.
Did you work closely with what's his name? David? No, wait, because he left. David from Israel. Do you know him?
Citron.
Yeah, David
Citron. Yeah. He's a great guy. Yeah, he covered the Israeli market while I was covering Southern Europe and Benelux.
Yeah, he set up a firm with a basketball player, if I'm not.
Yes, absolutely. He's a great guy.
Who's your basketball player?
We are actually trying to get actually a very, very strong skier to invest in our fund, which is exciting. Maybe touching briefly on your point before, if I can, I think looking more at how we think about Italy in the angles that you mentioned. I think one, we just see a relatively simple framework of seeing what happened in France, starting 10, 12 years ago and in other ecosystems. And we think, Italy has the same base of talent, ambition, etc., that we can, do a bit of that catch up. And then you need to look at other asset classes, right? If you could have invested as an investor into Italian medium-sized companies, mostly family-owned, you would have made a killing, because there is such an entrepreneurial DNA. And, I constantly see them, industrial companies, furniture companies, fashion companies, any sort of production type of company, engineering companies, right? And the different regions are full with these great, mostly family-owned sort of companies, still growing well, selling mostly abroad. And that entrepreneurial drive is extremely strong, right? First, second, third generations, great hires, people pushing very hard and growing those companies into the tens or if not sometimes hundreds of millions of revenues. And basically, we think all of that spirit and that entrepreneurial quality should apply in tech, right? I mean, there is product obsession in the fashion world, in the furniture world, in the industrial world. Italian engineers are some of the most product obsessed people, design maybe some of the most beautiful cars, but we haven't designed the most beautiful apps yet, right? I mean, Luca and the team at Bending Spoon, I think, doing an awesome job in already changing that and building a lot of best practice there. But that's what we're striving. We're trying to be one component that help that that transition happening as well into the whole tech and digital economy.
I want to ask you, and I have a small note on my framework here that says LPs look for firms that raise from a point of advantage and builds towards a point of domination. So I want to ask you about this. Okay, now we've covered a bit the point of advantage that you believe you have, and now I want to ask you about then what is it that you're doing that's allowing you to get to a point of domination instead of just advantage? Because in the end, I think VC is an outlier game. I think there's a small bunch that reaps the lion's share. That's not just luck. That's because they they end up being the preferred go-to within their market. Yeah.
So I think in a way we behave as a fund a bit as a startup, right? So in the beginning we start, we try, we involve, and then you build all of that into a product and processes. And I think that's when you're able to, we do the very manual, hands-on, strong support, commercial introductions, commercial support to winning this sort of 0 to 1 phase in a very sort of craftsmanship way for the first, 5, 6, maybe 10 companies we have. But every time we do something, we document it and we ultimately want to productize it. We're a very small firm. We want to stay like this. And that's how we think we want to deliver this support on a repeated basis with a lot of impact. So we measure a lot. We're very quantitative, right? We introduce our portfolio companies to certain LPs, to certain companies to win contracts. We will try to track everything all the way to the size of the renewal of the contract that they might get a year after. So basically, by being very precise on the impact we have for our portfolio companies, we want to have an edge. We want to, always grow that edge to dominate, as you sort of said, and we want to build underneath the fundamental sort of processes and tools that make us do this at scale, because it's easy when we have a handful of companies, but we want the fund to have around 25, and hopefully we'll do well and have a second fund and a third fund over time. So that becomes not possible by hand anymore, and that's why we very early on track the data, integrate it in our processes, and try to operate in a product-driven way as a small fund.
Yeah, and I think that you said a couple of times here something that leads me perfectly into the next part, which is my question is, what's your distribution flywheel? I always say VC is a game of reach. It's about reaching founders, about reaching co-investors, about reaching LPs. But you really have very limited resources. As you've said many times, we're a small fund. Any emerging manager, typically small fund. That means that you really have to obsess around creating a flywheel that allows you to efficiently execute on the distribution to the core people that you need to reach, because you cannot just do something, on the side and then that makes sense because you have so much money. You can't just hire people to do things for you. PR is your own nitty-gritty work often. So my question to you is, can you describe to me how have you built your flywheel to allow you to, by executing on that, make sure that you dominate the space that you need to, meaning reaching all the founders and co-investors and LPs that you need to?
Yeah. So I think first, our choice was to be very focused. And at the same time, you need to be very realistic of what you can and cannot achieve. We've set a geographic focus. We set a very defined sort of strategy because we can't do it all. So within that, we want to have a high impact. So we have a network of LPs who are mostly Italians, and then European entrepreneurs who can help us expand into Europe and to other ecosystems. So we're very focused by who can have a material impact on our portfolio companies at the early days, how can we help them? And we also very focused on our phase. We know that from 0 to 1, locally in Italy, we can have a totally unfair edge for portfolio companies. We think that then bridging them and helping them finding the right partners outside of Italy, we can be very strong. And that's where our mission most likely ends, right? We want to continue to invest and we'll become a follower investor and we'll continue to support entrepreneurs with follow-on capital, with the fund and maybe with continuation vehicles, etc. But that's where our really flywheel of unique support will stop. And I think we've been very conscious to sort of define where can we help, where not, and which sector and which sectors we cannot help. So it's sometimes humbling. Sometimes you need to say no to certain deals or certain opportunities that I would love to do. But we think, as you mentioned, venture is an outlier world. So if you pick a handful that you do really, really well, the results will really deliver your expectations. But you need to make sure that you can get outsized results to really do well as a fund. And that's why we try to be very focused.
You didn't mention here, but you did earlier mention your LP base. Could you talk a bit about that and how you leverage it?
Yeah. So the LP base is basically now over 120, mostly entrepreneurs, or what I call sometimes family entrepreneurs, and a few business professionals. So it's mostly people who know what building a company is, growing a company is, what failure means, what taking risk means. And that's already, we find a unique language in the investment world. And that's, we speak a different language than pure financial type of investors. We've added to, the core layer of the obvious entrepreneurs you would want to have and support the next generation, other profiles that we think can help open certain doors, bring some product experience, some tech experience, or sometimes some even industry-specific experience that we can be relevant with all the verticals we want to help. So we have people that can help on the different topics within a company, product, HR, go-to-market, etc. And we have people in many sort of different industries that can be relevant and help our portfolio companies know those really well. So we really were very conscious initially to build our LP base in a very specific way. And I think today most of the buckets we had defined have been filled. And we've been very lucky that in this also difficult environment, so many people have been willing to support us with their capital and their time, because we want people to be both financial investors, but also supporters actively of our mission in our portfolio companies. And I think maybe one last point we added as an expansion to help bridge then towards international ecosystems, because we're lucky that Italy is in the spotlight. We've also had quite a few foreign investors, from GPs to entrepreneurs, willing to put a foot in the Italian market, get to know it well, and help us bridge with their geographies and put small tickets in our fund to help build that, which for us is unique insight and access abroad.
Yeah. Now I want to ask you about the arena in which you play. So you described it in the beginning when we talked to Thesis, right? It's Italy, it's Italian diaspora, and it's foreign companies that want to enter the Italian market, and where there for some reason is an opportunistic fit with you. But I want to ask you to just describe to me as clearly and as data-based the opportunity that we're looking at here. In our framework, I'm sharing the venture market maturation framework from Foundamental, where they're saying, well, we've been looking at different verticals across the world and across venture, and said, okay, so when it started, when this sector got started, fintech as an example, when it got started, it took 2 years to go from 5 billion to 10 billion. And then from there, it took 6 years to go from 10 billion to 50 billion. And now today we have 490 billion of total VC funding in within fintech. So that means 8 years there. It took 8 years from when it really started and was a small thing to really become a large investable segment within venture. And then what they did with this framework, they went through a bunch of different verticals and found that there is some magic around this inflection point that happens in industries that it takes oftentimes, our good venture industry will mature from being very small and non-investable to being, an incredible opportunity, takes those 8 years. And if you then, hit that market at the right time, you're at the perfect place to dominate this sector, right? So my question to you is then, looking at the market you described before, Italy, diaspora founders and foreign companies wanting to enter Italy, how would you describe that from a numerical perspective? Why is it that there's enough now, whereas there was maybe too little before? Or if you just said B2B SaaS in London, I'd say, well, isn't that pretty filled up with good investors already? So my question to you is, how would you describe the opportunity that's right now in your arena?
Yeah. So I think there is a certain moment in time element as well, right? So I think if you look, we're now in 2024, if you start to look at most likely around 2020 is when also way more capital started to be deployed into Italy, right? And I think the amount of money invested in Italian venture, past the 1 billion mark, then reached around the 2 billion mark. And that's been a very step change versus what was ever done before. Part of it is a lot of public money, right? So through its arm GDP, the Italian government decided to invest way more in innovation and support. And I think for us, that's been an amazing component that supports. I mean, we don't benefit from it, but we see a lot of our portfolio companies and ecosystem members benefiting from it, which the main benefit is also attracting talent in bigger waves. So we think that's a very big element. The other, data point we look at is similar ecosystems and their progress, right? So as I mentioned, I was lucky to sort of be in France in 2012 at the end of it, when you still had François Hollande as a president. It was still, quite hostile as a startup ecosystem, but it was accelerating, right? Criteo was doing really well, Algolia was born, and quite a few others. And we're now around 12 years later, and we are at a huge acceleration since a few years, right? So that matches, I think, the years you sort of mentioned, that it takes a whole cycle of at least sort of 8 years to sort of really start to see some of the results. So we think Italy started that acceleration wave a few years ago, and now, it's accelerating. We are part of it. We see a lot of foreign investors coming in. I don't have the exact number, but if you were to track how many of the sort of seed and Series A Italian companies received foreign capital, it's been exploding over the last even just 2 years, I would say. Again, for us, this is an important data point on the acceleration component. So we see the local ecosystem benefiting from increased funding, increased attention, more companies being created, and good quality profiles deciding to be founders. And that's all now starting to materialize in the numbers, but it will take time, and we see the same sort of horizon needed. And most likely we will also see a lot of failures first, right? So I think that's already an important data point as well, is it takes most likely only 1 to 3, 4 years to see the losses on a pre-seed or seed investment that doesn't go through. It takes way longer to see the result. And that's part of the education we also want to share with our LPs is, get comfortable by losing companies early and have to wait for the winners to take more time.
Now, and this is the contentious part, and one that might be harder to answer on the open air, because I'm asking you now to comment on the players in the market.
Yeah.
Which means I want to ask you about, how are you materially different from the other players that are active for the founder profile you're targeting?
Yeah. So I think we learned it the hard way of why there is no small funds in Italy. When I mean small funds, I mean sort of your 15 to sort of 50 million. It's extremely hard. The regulations are not made for it. So at the pure pre-seed stage, let's say the 200 to 500K ticket, it's very hard to have an institutional vehicle or a fund to operate. And you have a lot of great angel groups, communities doing really well, and then a few corporate players doing well. But it's very hard structurally compared to some other markets like the UK or the US, where the barriers of entry at the small side.
Tell me, do you mean here from a from the complexity of doing deals as a fund with
No,
tickets of the type? Or do you
I'm
mean
more
setting up the fund and structuring it?
setting up the fund. So
Okay.
setting up a fund, the time it takes, the cost it comes, the regulatory complexities,
Why
the
not
thresholds.
why not just set it up in Delaware or London or Lux or Holland as so many others?
So I think there's still a local feeling of local appetite, right? So I think people want to see that. We also see it with the regulation to bring in foreign capital. It's even harder for us than to bring local capital. So there is more friction. We would be a big supporter of at least on a European level, a much more integrated market. But it's the reality. It's quite culturally and maybe even tax-wise. I'm not sure, but for Italian investors to invest abroad. So it remains, people want to see local investors. That's what they're used to. That's what they know. And then to execute deals, you need to be somehow used to the language, etc. As your articles are going to be written in Italian and those sort of stuff. But that's true in every single European market. But it's really on the fund setup. So, I think what we've been able to do is on the smaller side, the smaller end of things, bring in a fund structure with all the support and then the follow-on capital depth, etc., that a fund can bring. And that's something quite new, which hadn't been done before.
I asked a stupid question by design when I asked you why not set it up somewhere else, because many LP ecosystems are very patriotic, especially with their startup money. For many of them, it's kind of seen as, a way of supporting the ecosystem. And if you're super financially literate and used to doing stuff across borders, you're like, well, if it's structured in Luxembourg or here, I don't give a fuck. But if you're a local guy and you're not used to doing that, it's kind of like, why are you putting it in that tax haven? I'm not doing that. I'm not telling my wife or my friends that I'm investing in this shady thing happening in Luxembourg.
Absolutely. And a lot of the capital we raised is to give back, right? I mean, I think people are really willing to support and they see it as a way to give back to the ecosystem and where local angle matters. I agree with you. The more sophisticated investors we talk to wouldn't care, and they speak way more about your expected returns and all that rather than the impact you have. But on the majority are all entrepreneurs, and they care, how will we engage them? What impact will we have? How are we going to really help increase innovation and entrepreneurs to do well from Italy?
Do you think it's fair? Do you think it makes sense to have the structure incorporated in Italy, or do you think that, well, honestly, from your perspective, I get why they feel like this as an LP, but in fact, what matters is where the money is invested, and the fact that the returns are created in a structure that's in Luxembourg, well, it goes back to you and you're not in Luxembourg. Luxembourg doesn't tax it. So the only thing is really the structuring ecosystem in Luxembourg is, where we're putting a bit of money outside of our ecosystem, but all the rest is coming here.
Yeah, I mean, I think personally, it doesn't really make a difference, and I don't think it should. I'm a big European believer, so I would really love to see a very integrated capital market at the early stage. Wherever it's.
Thanks to a former Italian prime minister.
yeah. Hopefully, we'll see some of that come through. So. I think at the early stages, whatever is cheapest, most efficient, fastest to be to market should be the solution that we all use. Yeah. And then, over time, as companies grow, we should, tap the pools of the best types of capital independently of the borders. Reality and culture is a bit different. But I think that's the path we took, and still it's been an important point for our local LPs. I think on how we're different, right? I mean, I think a lot of the historical funds have done really well and grew their fund size significantly, right? I mean, I think Andrea mentioned that the last fund was, I don't recall exactly, but maybe 250 million or very large compared to what we have. And then I think it's natural that they have to go towards their current strategy, which is, Series A and onwards. But that leaves a very big gap. And their expectations are growing. The growth market is hard, and everything is pulled upwards from an expectations perspective, which means also the seed and the pre-seed stage is crucial. And I think that's where we really focused our efforts. And we see many other players now operating here too. 360 launched a dedicated seed fund as well, and we have a lot of other peer funds operating too. I would say we've really taken the angle of not having institutional capital, but just private capital with a very strong entrepreneur DNA, and being very hands-on. We don't want to be passive. We don't want to build a huge portfolio of spray and pray. We want to build a concentrated portfolio where we can build a lot of proximity with the portfolio companies and know them well and support them. And that for now puts us apart. But we, as I said, I think the market is growing and we're very collaborative. So we want to work with as many people as we can and hope to see that the whole pie will grow, not only the number of startups, the ecosystem, but also the managers that can provide an edge to startups.
Could you tell me a bit about the fund model that you're executing on? Meaning, what I want to understand here is a bit how you minimize the time and maximize the probability of you creating DPI. Maybe if we start by your track record, you could talk a bit about, so you described multiple investments, 20, I think, in that neighborhood as an angel. Now you've done 6 from the fund. Tell me a bit about, if you're up for it, what's the TVPI in total on the full angel portfolio, something like that. I'll let you take it from here, give the benchmarks or give the stats that you're willing to share.
Sure. So I think, it's different to be an angel to be a fund, but I'll cover the angel part first. So I think as an angel, I personally think it's important to take liquidity when it arises. So I've personally benefited to always leverage secondary opportunities to take some money off the table and recycle it. Thankfully, I'm in this industry, so deal flow is not an issue. So recycling those proceeds has been always possible. And so that led me to sort of, bag in some good returns and have a quite positive TVPI. What the exact number is depends.
DPI,
I mean,
even DPI.
Even DPI, yes. Yeah, I mean, as an angel, I think you can get it earlier, right? So I was lucky that a few of my early investments got acquired over time. In actually, our secondary options arrived between, on average, my exit times have been around 4 to 7.5 years. So that's where I sort of, as an angel, try to find liquidity, as I often find that if you stay too long, it's very hard. You sometimes get squeezed by growth investors and liquidation preferences, etc. And I think that's where I want to bridge those. These have been important learnings to us as an early stage fund, right? I think sometimes your successes, it's really important in venture to convert the successful companies into a strong financial return. And it's not always a given because of the behavior of late stage and what can happen there, the level of debt. We see it in quite a few ventures that that companies that have done really well end up not being the return expected, even if they're worth a lot of money, because liquidation preferences, debt set on the company and all of that. And so to go back to our fund model, we invest lead or co-lead. We want to be a significant shareholder, ideally, 10% plus of the ownership. We sit on the board. We're very supportive. We keep around 40% of our fund for follow-ons. So we target a portfolio of around 25 companies. We think we'll invest in around 7 or 8 with the follow-on sort of capital, where we can be deploying up to 4, potentially 5 million in total into those companies. So we want to be a significant and early stage investor, at least for the size of Italy. And then our investors keep on asking us to co-invest, follow on, and do more. So we think we will want to continue to deploy maybe with follow-on vehicles, etc., over time for 2 reasons. One, to defend the right of the early stage investors, right? So we think it's important to remain deploying capital into companies to keep that relationship and that position to defend your capital and sit at the table over time. 2, we have 2 types of entrepreneurs in our fund. We have some maybe younger ones who are very excited to get DPI quickly, and we have really permanent type of capital. So how do we think we will match those 2? And we haven't found a solution yet, but we think ultimately that help funding structures to get secondaries, even as a fund, maybe even reinvesting them in a continuation vehicle, are all very appealing options for us to provide that DPI also to those type of investors who want it really on, and to enable the ones that have a very permanent type of capital to remain invested. We think secondaries is important. We work, I think, on liquidity generation. We also open a lot and very early the landscape of contacts for portfolio founders. So that means getting to know foreign investors, potential foreign buyers, industry leaders, because you don't know where liquidity will come from, but we will need for each portfolio company to create it, because it's not that we have very liquid capital market that will make it very easy. And we have the chance of coming in a bit later, seeing what happened in France, seeing what happened in Germany. And liquidity, most likely as a European asset class, is the biggest topic we need to solve to deliver the concretely in a cash element, the returns everybody writes on their reports and that we promise to our investors.
So here, just to note, right, if you were more vertically specialized, vertically focused, this is where one would maybe dig a bit on will there be sufficient liquidity opportunities within this vertical? As an example, we all love tech bio, but there's not been that many exits from that type of strategy, actually. So for that reason, and that's just because it's a very new space. So that's one place where you might have LPs digging into to whether this is a liquid market. I think it's less of a bit less importance when you're as you are not vertically specialized, but rather have a focus on the geo. And then you can always want to then dive into and say, well, have there been created large successes in Italy that you basically go in and take your portfolio model, saying, okay, if you're expecting that you're going to create a $1 billion company here, then, well, has that actually been created in this time frame? How many of them would you have to invest in for that to be successful? So you're nodding a bit. So, I'd love to ask you, I think you've maybe done this exercise.
I mean, I've been asked these questions a lot more than done the exercise by some of our LPs, and it's early, right? So I think it's also a bit, unfortunately for us, it's hard to look back at the Italian data to see some of that, right? I think even listening to the episode with Andrea, even if he's been in the industry for a long time, a lot of the companies are still invested, right? And I think that it's the case for everybody.
So Andrea's strategies is not right on unicorns and the typical venture model. So to say as much as I haven't seen your portfolio model, but I'm guessing that you're doing a bit more of a alpha strategy, typical VC playbook, which makes it all the more important to ask someone like you, well, is now the time? Do I believe in that? Can you convince me?
Yeah,
so maybe
so absolutely. So we going a bit more for the alpha returns, and we come in earlier as well, and sort of larger outcomes where we want also more capital to join into the companies and ambitious foreign capital to join. And we think it's a collaborative approach with some of that vertical expertise or some of those other components that we don't have maybe as a fund we want to find with our co-investors. The time, at least on the early stage now, with great quality founders, great companies, great talent, building very useful products is coming, right? I think there has been a step change, especially in software over the last few years. And, we think also the recent downturn helped focus on economics more. So I think, the length or the depth of the cash burns will also reduce, which will widen also the pool of liquidity, because more financial savvy type of investors who want EBITDA, who want, at least a joystick where the company can control its cash flow destiny. A lot of the European companies are now way more in control of that, and they've seen that they can operate with much leaner teams, much lower cost bases, etc. And I think we are in a much more healthy environment. So I think the wave of companies that will do well from this measures are going to be way more appealing for those type of investors to be bought. So I think that's widening our opportunity. I think there's still a big liquidity element on IPOs and listing, etc., which I think in Europe is extremely difficult. So we don't see that. But I see a good opportunity on preparing our companies to be financially more disciplined, even if they're going for the high growth and unicorn and a bit more the alpha point you mentioned. And by squeezing the time as well, by having those conversations regularly with the companies and the co-investors, when should we exit, at what time, you also bring down the time span, and you push a bit the IRR, right? So for your investors, it's important. I think that's maybe one component which I find sometimes hard in other strategies is if you think you de-risk and you take more time, the IRR impact is really, really negative because you lower the return and you lengthen the time, and all of that, it becomes hard to compete with, the liquidity and other elements of traditional, maybe quoted asset classes. And then people should be, why should I lock in my capital for so long and have so much risk? So we personally think that we need to take a lot of risk. We need to go for large outcomes. And we've mitigated that with our investors by telling them invest less than what you thought. So I think to everybody, we've said, how much do you want to invest? They said X. We said, fine, do half. That's good because they all want to co-invest and deploy capital next to us now. But that also means that they have the right risk exposure for what we want to do here.
Yeah, and I think that's both from a fundraising perspective an incredibly bold move, but I'm also sure that it's one that creates trust with LPs. It's not what they are used to hearing, I'm sure. But I do think you're absolutely right. It's so important that you have LPs that have the right risk profile, so you don't have them breathing in your neck, and they're comfortable with what they've done and all that. And I think that back when I was fundraising from LPs that are not used to invest in the asset class, the last thing you want to do is kind of talk them into to have too much exposure, because they, that's going to blow up in your face. But we're all good salesmen, right? So you can talk people into much. Now I want to ask you one final thing, and that is, I want to ask you about how do you maintain your discipline? This is the 7 part of the EDGE framework here. What are the principles, the parameters, the processes that you run through to make sure that you're focusing only on your niche? And when your ecosystem, back when you were an angel, everyone knew you, and you joined in whatever seemed like a good opportunity. But now you have to say, this is my strategy. I'm not doing anything else.
So I think first we try to define it very precisely, right? So we defined it, we write it down, we put it on the wall, and then we need to repeat it time and time over again internally to our LPs who we ask for deal flow, and to the broader ecosystems, right? So we need to, and we need to do even more, I think, to repeat it time and time over again. And I think where we also lucky is that, we work in a very open model, right? So part of our LPs are very engaged, and we talk about our deal flow, and sometimes they remind us, look, well, okay, this is very exciting, could be a great return, but look, this is too borderline from the thesis we subscribe to. And so we operate, we have a dedicated team. We all super excited because I think we're doing the job we all would dream for, right? We meet super interesting entrepreneurs day in, day out. They told us our dreams. We dream with them. We support them. We can see some of our impact quickly. So we all, a small dynamic team, very passionate about what we do. And we have the chance to work in an open way that gives some of the check and balances as well. And we've told the story very clearly to everybody. And we said, please hold us accountable. Tell us, be frank. We are very direct. We're very transparent. As I said, we collaborative, and we want to bring people in our journey, from co-investors to the right advisors, to the right LPs, to whoever we think can help do what we think is the most important at our phase, and at least for the first few years of our companies, is do whatever it takes to improve the probabilities of success. And I think that's something very new, especially in the Italian ecosystem, where there's a lot of optimization, right? I see lawyers being used to have crazy complicated terms, and what if an IPO happens and all this. And I'm like, we are pre-seed. If we ever dream of an IPO, there will be, many rounds between these docs and the others. So this clause will never be there when the IPO happens. So, we want to behave in that way that is extremely focused on the mission today, the first few years, probabilities, and get this flywheel going to bring success to our entrepreneurs.
What a funny thing to even be talking about terms for the IPO and pre-seed.
Yeah, I think there's a partially you need to understand a bit is the Italian venture ecosystem and maybe many others is born also from many financial players entering the asset class from more mature asset classes sometimes, right? So or even not the investors but the lawyers or other supporters, that's what they know. And you start from recycling something. And I think now we see a lot of effort of standardization and a lot of people in the ecosystem doing a lot of great work to mature and adapt to what we really need. But that's some of the things you see and that are positively changing at the moment.
Yeah, no, it's a journey every ecosystem goes through, but it's been a while since I heard about that type of thing. But you're absolutely right, and it's the same thing. It's why you say that angels can be the best people on the cap table, but they can also be the worst. Because typically, as a GP, you'll have raised money. You're part of the venture ecosystem, so typically these things. But an angel can end up being the person or being the team that does the round in the beginning, and it just then they bring. Well, I'm in private equity. I know how to do this. Or they pull the lawyer in, who's then a private equity lawyer.
Yeah, some of those profiles, you're absolutely right. I think one other thing we try to do is, we often have angels co-investing with us in the companies. And having been an angel and being an angel, I think it's also important to keep these investors in mind because they've taken often the biggest risk.
I think it's so important to say that they can be the best and they can be the worst.
Yeah,
right? So
no, I agree. What I meant is a slightly
a subsegment here that's dangerous.
No, I agree. I think what I meant is how do you protect angels through time, right? I think that's one of the most topics I hate the most in venture is when I see angels being squeezed very late in the history of a company because they lost the influence and the power, and ultimately they don't get rewarded for the risk they've taken when the result is positive, right? And other investors squeeze them in a certain way. I think that's something as an angel, and I think as a community that aggregates angel and that speaks for a lot of them, it's an important element that we never forget that, and founders don't forget their angels who were there at the very beginning when they negotiate later on.
Yeah, and unfortunately, you just end up in a situation where it is the founders that need to stick up for you, right? Because as an angel, you can potentially get very squeezed. Yeah,
absolutely.
Lorenzo, thank you so much for joining me for this conversation. Was it fun? Did it make sense?
I really much enjoyed it, and very honored to have been the first to go through this new framework. So thank you for that.
Did it feel a bit like doing a recorded LP call for the first time?
A little bit, but more fun.
Was it more friendly? Thank you. I'm happy to hear that. Well, I'm the friendly LP. Lorenzo, thank you so much for joining me. It was really fun.
Thank you so much, Andreas.
Will we be seeing you at 0100 in Milan?
Yes, absolutely. We will be there, and we're doing a few events around that as well.
Amazing. Well, so are we. We're doing a masterclass for the community there, but also everyone else. But we're diving in together with Mark Pancala. We're diving into a fully comprehensive portfolio modeling session. So 4 hours or so of just nerd. So that should be good.
Very nice. Now we're organizing something with Mark as well around B2B SaaS. So very excited to have all of those experienced brains and people coming to Milan, and we want to make sure the local founders get the most exposure to these as well.
It's funny, this structure with these conferences, they're always supported by the local governments, right? So is this one and everyone else. But it's just so important that to bring those 20, 30 VCs to show that what's happening here, allow the founders to meet them, allow the risk capital to also meet them from an LP perspective. Just so important. So, yeah.
I agree 100%.
Lorenzo, thank you so much, man. See you.
Thank you.
Here's a few words from our beloved sponsor.
Welcome to the European VC podcast, sponsored by Flow. Combining technology and regulatory rails, Flow is enabling the private markets. For the VC market, Flow is working with integrates every aspect of fund management. From creating investment management agreements to handling custody services and regulatory reporting. This unified platform streamlines the administrative workflow, enhancing communication with limited partners and simplifying payment processes. A standout feature is the Flow Certificate, a globally tradable instrument that boosts liquidity and facilitates secondary market transactions, reshaping fund structures with more flexibility. As Martijn, CEO of Flow, puts it, by modernizing fund structures and enhancing liquidity, we're empowering investors, VCs, and innovators to grow significantly.
Yes!
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.